Hello family, welcome to this property market update for Cairns, tropical North Queensland. I'm going to be looking at the property market as of April 2024. And look, it's been quite some time since I've looked at the market in Cairns as a whole and really took a deep dive into, understanding what's going on there from a data perspective. So I suppose if you're a home buyer or investor, I think you're going to get some tremendous value out of what's going on here. Cyclone Jasper also did pass through in December, caused a lot of havoc, disrupted the Cairns marketplace a little bit. So we're going to see if that's had any effect on the marketplace at all. So if you're looking to buy in the areas, I think what you can take away from this video is some confidence and certainty that, hey, if I do buy in this marketplace, I know exactly what's going on prior to purchase. Stick around, guys. Before I dive in, I'm just going to give the business a bit of a plug here. So this is proudly brought to you by Tropical Life Buyers Agency. My name is Troy Bassini. I am the owner and head of research of the business. We've been around for about 5 years now and purchased, I think, more than $200 million worth of residential real estate. And we've helped a lot of investors and a lot of home buyers get into the marketplace in tropical North Queensland. We've got an office in Cairns and Townsville, but we also service the wider region as well, Atherton Tablelands, the Innisfail, Eacham area as well, and the surrounding areas of Townsville. So if you feel as though you are someone that is reluctant to move forward, you're not that confident in navigating the marketplace, you've been struggling to buy in the area, reach out to us. We might be able to lend you a hand and get you the outcome that you desire. So yeah, guys, feel free to reach out. That's our website there. Give us a call on that number. Visit us on our socials. Heaps of case studies, heaps of good free information there as well about the marketplace that you might be able to tap into to help you out with your journey. Cheers. So for those that have followed my market updates before know that I follow a very data-driven process. And if you're watching me for the first time, guys, what I want to do is really break down the market from a supply and demand point of view and looking at a combination of different data points on the supply side and on the demand side to paint a picture as to what's going on in the area. So yeah, you can go in and navigate with confidence from a place of understanding and from a place of knowing what's going on there in that marketplace. So these are the data points I worked throughout my presentation today. So I want to look at the median house price and what that's done in Cairns and what it's doing right now at the point in time of April, but also what it's done over the last 4 months, 12 months, and 5-year period as well. And you can see what's happening there. Has it changed? Has it gone up? Is it flatlining? You're going to get some insight there. What's going on? We're going to peek ahead over and look at the supply and demand side. So from the supply side, we're going to be looking at our listing volumes going up? Is inventory contracting? What's happening on the supply side? If supply is tight and demand is high, is that creating an imbalance there in the marketplace? So we're going to be looking at those supply side metrics. We're going to look at the demand side metrics like days on market, how fast properties are selling for, the overall absorption rate. And then once we've looked at those demand and supply side metrics in the marketplace, we're going to then have a look at what's going on the rental side of the market. So that's really good value also for those that might be looking to invest in the area. You can get some understanding and context around what's happening on the rental front to then go in and navigate that market from that point of view. Then I'll finish off by summarizing some of the key findings and key takeaways, and hopefully you get some value from that. Let's dive in, hey? All right, let's look at the median house price in Cairns and what's happening. So we can see here that the median house price in Cairns as of April 2024 is currently $651,000, up from $633,000 or 2.8% in April 2023. And the median house price has grown by 1.4% in the last 4 months. So we can see there over a 12-month period, the median house price has went up 2.8%, and then over the last 4 months, it's went up 1.4%. So you can see here, this red circle is the point in time of April, and we can see here that median house price of 651. A couple of points I want to make in relation to that. The median house price, despite Cyclone Jasper passing through in December last year, the back end, the last 4 months of the year was still relatively strong, right? Increasing by 1.4%. So the market had a little bit of steam towards the end of 2023 there, and leading into 2024, I'll be doing another market update. I'd probably say in the next couple of months, we'll really be able to gauge and understand how the next 6 or 8 months is going to look in Cairns. But it's good to know that despite Cyclone Jasper, the market is still sort of surged along there and been very, very resilient despite what's happened. That 2.8% in relation to previous years, I'd probably say it's not as high and not as fast-paced growth we've seen before. Cairns has had upwards of 6 to 7%, specifically during that COVID period and towards 2022 and then even 2021. There was a lot of acceleration in the marketplace and it pushed up well sort of above that 6, 7, 8% mark, and then individual suburbs within Cairns were doing double-digit growth. But we can see here that it's really, really slowed down right to around that 2.8%, but nonetheless still surging along. One of the other things I wanted to make, points I wanted to make, was that median house price, 651, I think is still a very affordable market when you think about it relative to the southern markets such as Sydney, Melbourne, Gold Coast, and the Sunshine Coast. We get a lot of intra-regional migration that comes into Cairns from the Southeast Queensland corridor. So when the Southeast Queensland markets have $1 million median house price, $1.2 million median house price, Brisbane, $1 million median house price, it makes Cairns a really good proponent for a place to live or invest, because that affordability is very good relative to those markets. So people are selling their homes on the Gold Coast and Brisbane, on the Sunshine Coast, Sydney, Melbourne for $1 million or more, and then moving up into these areas and their dollars stretching a lot further. So I think that's really, really good relative to the southern markets, and that gives me great confidence, particularly if you are looking to invest in this area, that there's still a lot of wiggle room in this median house price to go up over time and in the short, medium, and long term, because it's still very affordable for a lot of the Australian property market buyers, particularly outside of this immediate region. Another point I wanted to make was that despite Cairns doing 2.8% annually over the last 12 months, there's been many individual suburbs that have actually outperformed that aggregate. So I know Mount Sheridan, parts of Bentley Park, Redlynch, Brinsmead, Edge Hill, they've all had close to 6, 7, 8% annualized growth last year. So if you are looking to invest in the area, just jump in and be mindful that, hey, despite Cairns having an annualized return of 2.8%, there are many individual suburbs that have actually outperformed that. So jump in and do your individual research on suburbs, because that individual suburb may or may not be outperforming that Cairns average, because there's, even as you dive into Cairns as well, there's some suburbs that have outperformed, some suburbs that are sort of online where the aggregate is right now 2.8, and some suburbs have done virtually nothing over the last 12 months. So make sure you look at each suburb on an individualized basis. And one of the last things I wanted to say was that you can see the trend line here over the last 5 years since 2019. We've had a massive sort of surge in the marketplace, basically starting around that COVID period in 2020. It's really inclined up to around that 2022, and it's flatlined a bit, and now we're starting to see another small incline. Is there going to be accelerated growth like the 2020 period was around COVID? I'm not too sure. I would love to have a crystal ball. All I can really speak to there is basically if we can look at what's going on in the macro environment in Cairns. Is the macroeconomic environment strong? That creates jobs, that has the economy ticking over, that then trickles down to the housing market. And then are all the micro data points looking good as well from a supply and demand perspective? And that's all we're going to look at today, really that micro data around supply and demand, because if there is an imbalance between supply and demand at the point in time of now, April 2024, but it's also, and if you extrapolate that out over the next couple of years, we are likely to also see a continuation of house price growth in the area, particularly if supply remains low and demand remains high. And that's what we're going to unpack today as well. But I'd love to have a crystal ball, guys, around where this median house price is going. All I know is that it's still affordable relative to other markets. Cairns economy at a macro level is looking really good, and once we take a deep dive into the supply and demand side of the market right now, we'll be able to see what that median house price growth is likely to look like going forward. Okay, let's take a look at the supply side of the market now. Obviously, we've just looked at the median house price here, and we've basically come to the conclusion that the market is rising. Over the last 4 months, it's grown by 1.4%, and over the last 12 months, 2.8%. But what's causing that, right? Is it low levels of supply and high levels of demand? So we're going to unpack the supply side of the market, because that's one side of the equation. If we've got one side of the equation looking good and the other side of the equation looking good, we can basically establish that that's what's causing that median house price to continue to grow in Cairns. So we can see here that stock levels are currently at 0.4%, which means that there are approximately 219 houses currently listed for sale in March 2024. This represents a 9.1 decrease in listing volumes compared to March 2023. So over a 12-month period, if you were to compare March last year versus March this year, there's been a decrease in stock levels by 9.1%. That's all that's saying. So if we go to this graph here, you can see this red circle here is the point in time of March 2024, 219 listings, 0.4%. A couple of points I wanted to make in relation to, I suppose, this supply side of the market and what this data is telling us. So if we actually look here where we are in March, we can see that here there's been basically a huge spike over the last 3 months from, what is that, December last year or January this year, from basically around the levels of 0.2, which going back historically was almost at its lowest over the last 3 years, at its lowest point of 0.2, but it's since jumped up from 0.2 to 0.4. I think if you read into that, you probably go, oh, it's stock levels rising now. There's a lot of supply coming onto the market in Cairns. Cairns starting to now see an overabundance of supply potentially. And if you're an investor, you don't want to see that supply pipeline pick up too much, because obviously that creates additional competition for the property that you have to potentially get capital growth. And if you are a home buyer, you're seeing that sort of upkick in supply. You're probably going, oh, there's going to be a lot more opportunities now in Cairns for purchase. But if you go back and look at this just drop here, that actually coincides with Christmas. So I think, if you see this black dotted line here, Cairns was following the long-term trend. And as you can see, generally around that Christmas time here, last year and the year before, there's always this sort of drop in listing volumes, and that creates this large V or this dip. And that just naturally happens over the Christmas period. A lot of people don't choose to sell their property over that time, so then obviously listing volumes drop off a cliff. And now you can probably see here it's reverted back to probably its long-term trend, which is around that sort of 0.4 to 0.5%. So I wouldn't read too much into this if you're an investor or home buyer thinking that there is going to be a whole lot of new supply coming online. I think it's just reverting to the long-term trend there, guys. And if you look at that long-term trend of 0.4%, 0.5%, and you look at that relative to the size of Cairns, over 170,000 people in terms of population, and more than 100,000 properties potentially there for purchase, to only have the best part of 219 houses currently available for purchase each month is very low relative to those sort of macro figures when it comes to the size of Cairns and the amount of properties that potentially could be sold at any given time in the marketplace. So I really like that it's low if you are an investor, but if you are a home buyer, it can be quite challenging as well. Another thing I wanted to make is, stock. This is stock levels, and where this stock is coming from is obviously people selling their houses, but it also comes from new supply. So builders and developers are creating house and land packages. So obviously when that stock is completed, those builders and developers are selling that to the marketplace as well. So new stock can be injected into the marketplace, and that can create a spike in, I suppose, the overall stock levels as well. But one of the things that we're seeing in Cairns is that there is a very low velocity of new supply in the pipeline, and I'll get to that towards the later end of the slide as well. So I don't see that moving the needle too much in terms of injecting the market with a whole bunch of new supply to satisfy, let's say, existing demand that's in the marketplace. So if you look at this from a supply point of view, the only supply that is really on the marketplace at the moment is people that are selling property. And if you look at the new supply pipeline and what's coming on from a new property perspective, there's not a whole bunch of new supply. Because if this graph was to be skewed, let's say above 1%, then that means that there needs to be a whole bunch of people in Cairns that sells their property, so they all decide to sell it, spiking the supply pipeline, also the listing volumes, or there needs to be a whole bunch of new construction let's say, hundreds and hundreds of new properties being constructed and sold each month to push these supply levels above 1%. But yeah, overall, guys, I think this as a percentage relative to the size of Cairns, very, very low levels of supply, and it can definitely be it could be definitely the thing contributing towards that median house price growth happening in Cairns over the last 4 months and over the last 12 months, and obviously over the last few years is obviously a small or low levels of supply, and that's a really good sign for capital growth. So if you are an investor, these are the signs you want to see, and these are the graphs you want to see where the listing volumes are trending well below 1%. So very low levels of supply in Cairns, guys. All right, the second supply side metric we're going to be looking at is the inventory levels. So the difference between, for those who don't know, between stock levels and inventory levels, basically what the stock levels refers to is how many properties are coming on the market each month for sale. And the inventory pool is how many properties are available each month for sale. Because when you think about it, not every property that comes on the market each month actually sells. So let's say 100 properties come onto the market each month, 70 of them actually sell. So that means 30 properties then roll over to the next month. So if there are another new 100 properties available for sale, that means that the total inventory pool is 130 properties. So that's all the inventory levels speak to here. And basically, when we want to look at inventory levels, this graph here actually breaks down inventory levels into a category of weeks in terms of out of all the properties there that are in the marketplace, how many weeks would it take to liquidate all of the current stock. So this is what the graph reflects. So inventory levels spike back up to their long-term trend after a massive decrease in December. Inventory levels currently sit at 5 weeks. So that means that there are a pool of properties currently in the marketplace right now in Cairns that if the market became redundant tomorrow, it would take approximately 5 weeks for all of those properties to be liquidated and cleared out. So we can see here that there was a massive dip in December, and that obviously coincides with Christmas. And if you actually backdate that, you can see here there is always a massive dip around that December period. Obviously, the listing volumes do decrease during that period. A lot of people don't sell property over that period, so we'll naturally see a V during those key December or Christmas periods here. With the long-term trend, it's sitting well around that sort of 4 weeks to 5 week mark, and that is a very healthy marketplace. That suggests that demand is really strong. When the average really across the country, when people sort of break down what is, or people speak to what is a healthy marketplace, generally anything under 3 months is a very good and healthy market. But this one is basically 1 month or just over 1 month, 5 weeks. So that suggests that Cairns, when compared to, like, let's say the national average, is a very hot market and has a very low level of, it has very low levels of inventory. So very interesting there to see, the inventory pool across Cairns very low relative to the national average, and relative to its long-term trend, it's kind of had a little spike here around this April period, but I think it's certainly going to taper off over the coming weeks and months back to its kind of long-term average and trend around that 1 month. So if you're an investor, this is certainly what you want to see. You want to see these inventory levels trending around that one month to 5 week period, which is very, very good. And that just suggests that there's not a whole lot of properties available for purchase in the market. So we have a market here that is relatively low in terms of its total supply. So once we have a look at the demand side metrics, and we might establish that those demand side drivers are very high, when you have an imbalance between supply and demand, that causes that house price friction there. But yeah, inventory levels very low in Cairns relative to the national average, and it's just peaking above its long-term trend, but I'm thinking it's going to revert back there very soon after a recent spike. Okay, so we've just looked at the supply side of the market, at the stock levels and at the inventory levels, and basically what we've established there, that overall Cairns is in a low supply environment. So stock is on the low side, and now what we want to try and do is establish if there is high demand. Because as I alluded to before, if there is an imbalance between supply and demand, that certainly can cause house price friction and can continue to push that Cairns median house price up. So we can see here that the demand side data we're looking at now is days on market, and basically all that speaks to is out of all the properties that are on the market for sale, how many days is it taking for them to sell? And this is an aggregated number here, and obviously the higher the days on market means that the market isn't as hot. The lower the days on market means that properties are selling very fast. So we can see here that the days on market across Cairns sit at 32 in March 2024, maintaining a very low trend since early 2022, and vendor discounting also down to a 5-month low. Okay, so there was two things there: days on market and vendor discount. I didn't speak to vendor discounting, but basically vendor discounting, all that is all the properties that are coming on the market for sale, are they discounting from their purchase price, low or above, or selling above purchase price to be sold? And obviously if they're discounting much lower than the purchase price, let's say a property goes on the market for $450, ends up selling at $420, that means that it's discounted a certain percentage there in order to be sold. And obviously when those properties are discounting in a marketplace in order to be sold, that just suggests that you aren't in a really competitive market there, because often in competitive markets properties sell at around this price or above this price. So you don't want to see that vendor discounting figure too low there. But look guys, let's break this data down. So a couple of points I want to make here. So 32 is the average or the aggregate across Cairns, and as a number 32, that just tells me that Cairns is still a very hot market, because when you think about it, the average contract time in Queensland is around 30 days. It's not 65 days, 70 days like you are in like there is in New South Wales and Victoria. No, 30 days is the average contract period. So if the average across Cairns is the average property is taking 32 days in Cairns to sell, that means that properties are going under contract within the first 1 to 5 days of going on the market, maybe even in the first 24 hours in some cases. Because if you think about that, that means that a standard contract is 32 days. People are putting it under contract in the first couple of days, going through the terms and conditions of the contract, and then settling on that sort of 35 days, bringing it down to that 32 aggregate. And then that is a very hot market, guys. When you certainly compare that to, like, let's say the national average of around 60, and then when you start to even compare Cairns to other big regional markets across Queensland, it's still performing very well. And look, from an investment point of view, this is also what you want to see. You want to see a market that has strong demand in it, where properties are selling within the first couple of days, because that means that there is still a lot of imbalance in the marketplace where demand is high and maybe stock is low, and that can continue to put upward pressure on that median house price, as I said before. So very good. If you actually look at it in terms of its long-term trend, like it's trended very low for a very long time, as I said, back to around 2022. So Cairns has been a marketplace where demand has remained relatively strong for a very long period of time, and it seems to be kind of maintaining that same trajectory. And look, I don't have a crystal ball, but you know, that certainly that long-term trend has been very good in terms of you know, being a low environment where properties are selling for very low days on market numbers. But going forward, I think it's probably certainly going to remain the same if we look at the supply pipeline and establish that there's not a whole bunch of new supply coming on the market, saturating the market, or demand maybe slowing down. So yeah, this is what you want to see, guys. This really healthy long-term trend. So if you are investing, you can come into this marketplace and get some confidence and certainty that demand is very strong across the market as well. Bit alarming here where you start to see these black dots sort of around that 3.5% in the last sort of 6 to 8 months. So you can see here that vendor discounting is basically now down to a 4 to 5 month low, which is around that 2%, which is very good. But over sort of the last couple of months, it has spiked here and there, around that sort of 3.5% up to around that 3% and 2.5%. So basically, what that means is properties that are coming on the market. Let's say they come on the market for 500,000 in Bentley Park in Cairns South. It's probably selling for around that 485, 490. So it's discounting in order to be sold. But this is the aggregate across Cairns. Obviously, if you are investing, dive in and do your research on individual suburbs, because you'll find that some suburbs aren't discounting at all. What I've been seeing in the marketplace is a lot of discounting mainly happening around the Cairns CBD. So there are a lot of the unit and apartment market stock has been discounting in order to be sold. And then obviously these areas that were affected by flood, people are selling in those areas. Obviously had to make some huge concessions on their price points in order to sell those properties again as well, because not a lot of people are interested in buying in those areas that are flood affected. And there are certain luxury high-end homes across Cairns as well that are slightly discounting in order to be sold around sort of the northern beaches, around the Brisbane and Edge Hill as well. So that's kind of dragging up or pushing up that total vendor discounting rate there overall. But look, this is really good when you look at it overall from a demand point of view across Cairns. Properties are selling very fast, and properties are selling around list price or slightly under, which suggests that demand is very strong in the marketplace. Okay, so the last demand side metric we're going to be looking at is the absorption rate. And basically all the absorption rate speaks to is, out of all the properties that have come on the market over the last couple of months, what percentage of them have actually sold? And that gives us a percentage, and that percentage then translates into an absorption rate. So we can see here that the overall Cairns is experiencing a healthy absorption rate of 74% from January to March 2024, so the last 3 months, slightly down from 80% during the same period last year. So a 6% decrease there year on year from this time last year. So look, you can see here that from January to March, we've had a total of 525 listings, and we've had 390 sales. So I'm speaking to houses here, guys, and this has resulted in an absorption rate of around 74%. So overall, guys, that's a healthy marketplace. Generally anything above 60% is a healthy market, and then generally anything above 70% moves into that sort of hot market, and then anything above 80%, 90%, you're in a very highly competitive and heated market. So overall, look, Cairns dropping from 80 to 70 shows that there may not be as much demand in the marketplace as last year. So that is something to maybe watch over the next couple of months. If that absorption rate starts to really taper off, then you may start to really see signs of the market slowing down. But for it to sort of still be around that 70% and above suggests that there is still a lot of heat in the market and demand to maintain that rate above 70%. I'd probably say if you compare Cairns to Townsville, if you compare Cairns to Mackay, Rockhampton, Bundaberg, these other regional hubs, I'd probably say it sits behind Townsville, sits behind Rockhampton, and sits behind Bundaberg. So I'd probably say fourth on the list overall. So it's doing okay when you start to compare it to the other big places across Queensland as well, the other big regional hubs. Because if you are investing and you maybe considering if you should buy Cairns or buy Townsville or buy Mackay, Rocky, etc. Cairns relative to those marketplaces is doing all right, but it's probably not in the same category in terms of its overall absorption rate. But look, guys, I think from a demand side point of view, it is a healthy absorption rate. And things are being sold. The best part of 74% of things are being purchased in the marketplace. So demand is strong there, and only a small percentage of properties are actually going through the keeper and not being sold at all. So look, I think what we can establish is that demand is healthy, so the overall absorption rate is healthy. Days on market is low, and vendor discounting is low as well. So for me, it's ticking 3 of those boxes from a demand point of view. And when we looked at the supply side of the market, stock levels were well under 1%, and inventory levels were around that 1 month period. So we have low levels of supply and still some strong levels of demand here. So I think there is still an imbalance in the Cairns marketplace right now, where demand is actually exceeding supply based on the metrics we've looked at just before. All right, so we've had a look at the demand and supply side of the market, and now what we're going to do is have a look at the rental side of the market. So if you're an investor, stick around. I think you're going to get some good value out of what we're going to break down here now, looking at the rental side of the market. So we're going to start off by looking at the median rents and what's that been doing over the last sort of 12 months in Cairns. So we can see here that the median rent continues to follow the rising trend, now sitting at $564 per week for houses in Cairns, and it's actually up $41 or 7.8% since March 2023. So year on year, a 7.8% increase and a $41 increase. So look, it's a rental market that's continuing to rise. So I think that just means that a lot of people are looking to rent in Cairns, and we might be in an environment where there is not a whole lot of rental stock in the marketplace. And we'll be having a look at the vacancy rate after this. So if the vacancy rate is trending very low, obviously that's going to put upward pressure on rents. That's going to create a lot of competition in the marketplace, and things are going to be renting at a premium. But to certainly move or increase by $40 over a 12-month period just goes to show that it is a really strong rental market, and it's not necessarily good if you're a renter in the market or if you're a tenant, because that is certainly that increase is certainly eating into your budget, your weekly budget, your cost of living. It's certainly going to have an impact. But if you are investing, certainly fattening up your yields a little bit there, and making it sort of a lot easier to hold property in this area as well, because you want to try and maximize your yield as best as possible when you're investing in regional markets, and in places like Cairns as well, where holding costs are a lot more expensive than investing in capital cities when you start to look at rates and insurances, property management fees, etc. So you want to make sure that those rental yields are good, and you're investing in markets that have really strong median rents. But look, guys, $564 per week. I'd probably say if you look at the average income across Cairns, that's probably sitting at around that sort of 25% of, I suppose, the average household income there. So there's still a bit of wiggle room in there, I think, for that rental market to continue to push up, or that median of 564 to continue to push up into that 600, 650 mark as it sort of moves into that 35% of household income. So I think overall, despite it being quite a high figure, it's still relatively affordable as one's percentage of their income. So that suggests to me that the market still has plenty of upside, I think, to move. As a median rental figure of 564, if you compare that to Townsville, it's definitely outperforming Townsville. If you compare that to Mackay, it's outperforming Mackay. If you compare that to Rockhampton, it's outperforming Rockhampton. Bundaberg, it's probably slightly on par with Bundaberg. So when you start to compare and contrast Cairns' median rent to other markets, it's certainly outperforming from that respect. But when you look at it also, Cairns is a higher median house price. So the yields relative to the house price is probably the same as what you get in Townsville, what you'd get in Mackay, Rockhampton, because the median house price is a lot higher. But at least we're seeing prices push up in Cairns, but also rents continuing to follow. So it doesn't become too hard to hold property here as an investor over time, because what you want to be doing is making sure what you want to see a market is prices pushing up, but also rents following. If prices continue to push up and rents slow relative to those prices pushing up, it becomes very hard to hold property in this marketplace. So yeah, guys, very good median rents in Cairns. You can get some really juicy yields if you are looking to invest here. So we looked at the median rent, and it's done some crazy growth over the last 12 months. 7.8%, $40, huge growth. And what could be causing that is obviously the supply levels. And what we're going to be looking at now is the vacancy rate, which really speaks to the supply levels across Cairns. So we can see here that vacancy rates continue their downward trend, now sitting at 0.6%. with only 67 vacancies currently available for rent in March 2024. So we can see here this red circle. We go up 0.6 or 67 properties. Wow, look, this is a very, very grim rental market here with a vacancy rate sitting at around 0.6. And if you actually follow this black line and you backdate it to 2022, you can actually 2020, in fact, so 4 years ago, you can actually see here that the rental market in Cairns, in terms of vacancy rates, is the lowest it's been over the last 4 years. Hence why we've seen such huge growth there in that median rent, because that low level of supply is putting upward pressure on those rents. You can see here a massive dip basically since November or October last year, down to around that 0.5%. And look, 67 properties in a place where there is close to 60 to 70,000 dwellings here that could potentially be rented, and a population of above 170,000 people, and a lot of things happening in the macroeconomic environment as well that's driving a lot of people into the region. To only have 67 properties available for rent is very, very grim. It's a very competitive marketplace, and it's not a good environment if you are someone looking to rent in Cairns or moving into the area and potentially rent it, because I think it's going to be a highly competitive environment. We bought a property last month in Redledge for $840,000, and it's renting for $860 per week right now. We had 12 applications for that, and this is the upper end of the market. This is $860 per week. We had 12 applications. So if you go back to the affordable end of the market, between that $500,000-$600,000 mark, where properties are renting around that median rental price of around $550 to $600, you're probably getting anywhere between 20 or 30 applications there per property. So not a good thing if you are renting, definitely a good thing if you are investing. You can see that you're in a really, really hot rental market here, so you're going to get a rental premium for your property, and you're going to get a lot of applications and a lot of choice when it comes to potential tenants you can put into the property. So very good there, guys, from a vacancy rate point of view. If you compare this vacancy rate to the other big regional hubs across Queensland, very low and compared to Townsville. I think Cairns is outperforming Townsville right now. It's outperforming Mackay, outperforming Rockhampton. It's probably on par or slightly higher than Bundaberg. So Cairns and Bundaberg, are having a really good toe-to-toe fight in terms of vacancy rates right now. Cairns, I think, sitting second behind Bundaberg. So look, guys, if you are investing, very, very good signs here, knowing that you're moving into a market that has low levels of supply. I think what's really caused this as well is the sheer lack of new stock in the pipeline. So there's not a whole bunch of new house and land package construction happening in Cairns. The velocity of those construction sites in terms of new product has been very slow. So we're not seeing enough there coming onto the marketplace to move the needle here, to push up the vacancy rates, to create that additional supply. And another thing we've seen over the course of the last 24 months, even going back last 3 years, I would say, where a lot of the investor stock has actually been purchased by owner-occupier buyers. And that's really taken a lot of the rental stock off the market and into the owner-occupier pool, really creating a lot of pressure and sort of reducing those vacancy rates down and reducing those supply levels. So that's certainly what we've seen also. And if that continues to happen now that we're in an environment where interest rates are going to go down and more owner-occupiers are going to be, owner-occupied buyers are going to be coming into the marketplace, that can even cause more issues in terms of additional rental stock or current rental stock, because more owner-occupier buyers might be purchasing existing rental stock and taking those out of the rental pool. So that's going to be another issue in itself going forward. These low interest rates that are going to be coming on, I'd say, over the next sort of 6 to 12 months as we move into an environment now where interest rates are stabilizing and starting to decrease. So we've seen the median house price just continue to surge along, and we've seen that median rent push up as well, astronomically over the last 12 months. So what can come in and maybe take a bit of pressure off, those rents from growing and from the median house price growing? What can slow it down or make it sort of flatline or plateau a bit or even retract is the level of supply we have in the market. And we want to look at the supply pipeline to establish, what is actually happening there to see if it's going to move the needle in terms of, those rents and obviously that median house price going forward. So we look at the supply pipeline for Cairns. What we look at is the building approvals. So basically the building approvals is a good reflection of what the supply pipeline look like. Obviously, the lower the building approvals relative to previous years means that you might be, if you extrapolate the time frame out, the next few years might be looking pretty grim if you are in an environment where building approvals are low. But if building approvals are high, then you know that there is going to be additional supply coming into the marketplace that may alleviate and take a bit of pressure off the median house price and median rents. So we can see here that the Cairns marketplace, a total of 380 building approvals in place for the current financial year, so 2023-2024 financial year. So you can see there, I've got that arrow and it points to 380 approvals. And if you actually benchmark that to previous years, it's actually, I think, underperforming, or I'll probably say it's on track. It's probably, we're 6 months into the year right now. So if you extrapolate that out over another 6 months, we're probably going to end up around that 500 or 600 total building approvals for the current financial year. So I think we're on track relative to those previous years in terms of, I suppose, the supply pipeline for the next few years, if it maintains a current trend. But the good thing about this graph I like from a supply pipeline point of view is that if you actually backdate this, go back to the last financial year and the last financial year before that, back to 2020 to 2021, you can see there that we were in an environment where supply has been relatively okay, like the supply pipeline in terms of building approvals has been quite high. It hasn't been above 1,000. It hasn't been above 1,000 since the 2014 period. But it's certainly above that sort of 500 mark, because what will actually happen there is that those building approvals will then actually translate into end product over the course of the next few years. So we're probably starting to see sort of the fruits of the approvals that happened in 2021 and 2022 come on the market sort of in that 2024 period and 2025 period. Because if you think about the construction phase, developers, they get their approvals, they get funding, and then they obviously go through the construction phase, and then there is an end product. So it can be anywhere between 1 to 3 years until we have an end product hit the marketplace. So I think we're going to see a lot of that sort of new supply come onto the marketplace in the 2024 period, 2025 and 2026. Where a bulk of the new supply is in Cairns, if you think about it, there is a couple of infill sites left for house and land packages around Kowara Beach, around Trinity Park, around Smithfield, around Redlich. So there is some small infill developments happening around there, but I think that's going to be capped in the next few years as those infill developments eventually sprawl out and there's no more land left. I think majority of the new supply pipeline for house and land packages will be in the southern corridor of Cairns at Mount Peter Estate, Gordon Vale area. Obviously a lot of cane farming there. A lot of developers have stage development happening there now as well for new house and land packages. Massive growth corridor of Cairns, so I can see a lot of the new supply pushing out into that marketplace south of Cairns, and that supply pipeline coming on there. In terms of high density, medium density, I don't see a lot of cranes in the sky in Cairns. Not a whole bunch of medium or high density happening around the Cairns CBD at all. There is a couple of places being refurbished, a couple of small sort of townhouse developments, but nothing sort of high, medium density, large scale development happening around the Cairns CBD at the moment. That Nova development next to the Cairns Central Shopping Centre there is meant to be 1,000 or so apartments being constructed there. It was meant to be a master planned community of high density living there, and that hasn't taken off now. It's been the best part of almost going on to a decade since it was first conceptualized, and I don't think a shovel has even turned over soil there yet. So not a whole bunch of new supply in terms of high density around the Cairns city area. But look guys, from a supply pipeline point of view, it's hard to tell whether or not this new supply is going to come into the marketplace and move the needle on things. It's going to slow down the median rents. It's going to slow down the median house price. I can't really speak to that just yet. I think it's still low relative to the demand side of the market right now when it comes to rent, people interested in renting or people interested in buying in the marketplace right now. I think the supply pipeline, based on what I'm seeing, is probably still not enough to sustain the current demand levels. So I think we're certainly going to have an imbalance going forward here for Cairns, guys. Woo! All right, guys, you made it. Congratulations. Hey, look, I'm just going to finish off by just summarizing everything we've just spoken about and covered as part of the market update today. And look, if you have tuned in for the first time and you aren't familiar with data, it can be quite overwhelming and hard to digest. So I think taking away some of these key points and just summarizing, the key points is enough for you to go away and then start to navigate the market and buy from a place of certainty and information rather than uncertainty and speculation. All right, let's start off by looking at the median house price. So we can see here that the median house price is growing, but not at the same rate it did during the last couple of years, so 2021 to 2023. So just to speak to that point, yeah, obviously Cairns hasn't grown as aggressively as it has over the last few years, but it's still a market that's growing. So if you are looking to buy in the area, whether you're a home buying or investing, I think the longer you sit out of the marketplace, the more it's going to cost you to get in, but not as aggressive. The market's not going to move as aggressively as what it has in previous years. But nonetheless, if you sit out of the market and watch and sit on the sidelines, it's still a market that's going to be moving and it's still going to cost you more to get in. So my advice there would be, if you're investing or home buying, is to take action if you are looking to buy in this marketplace, because you might even get to a point where it's going to cost you an extra $20,000, $30,000, $40,000 more to buy the same property in 6 months or 12 months if you sit on the sideline, because that market is still moving along. And look, there's still a lot of variables as well that makes that median house price look very attractive. Obviously, affordability, lifestyle. When you benchmark that median house price compared to these other parts of Australia, Sunshine Coast, Brisbane, Sydney, Melbourne, very affordable still, and Cairns still has a lot of good macro and micro lifestyle drivers. So that median house price has a lot of wiggle room to keep pushing up, guys. So take action when you can. In terms of supply, supply side of the market, so we basically established that the stock levels are trending below 1%, and the inventory levels around that 1 month, and it's been like that for almost 3 years now. So we've been in an environment where Cairns has had very low levels of supply. So if you are trying to navigate this marketplace, you're navigating in a marketplace where there's not a lot of choice and very strong demand. So it's going to be highly competitive, guys. So if you are buying in the marketplace, you just have to be aware that you're competing in a marketplace where supply is low and demand is high. So there is a lot of competition there. And what that might mean is that you might be missing out on property as well. At the same time, there's maybe not a whole lot of choice to pick from in the suburb you propose to buy and the price point you propose to buy. So the journey might actually take longer than expected, because the listing velocity of what you're chasing is quite low. So basically, from a supply point of view, guys, if we were to summarize that, Cairns is a very tight market when it comes to supply levels. If we were to look at the demand side of the market now, so we basically looked at days on market, and days on market has been low around that 30 days for the last 3 years. So demand is very high and properties are selling very fast. So coming back to that competition thing, a lot of demand on the marketplace, properties are selling fast. So basically, if you are looking to buy, if something comes online, get out to the open home as soon as possible. If you're trying to buy from interstate, get us to help you out, or ask the agent for a video walkthrough, or get a friend or family to look through it as soon as possible, because the longer it sits there, it's going to become more difficult for you to potentially buy, as the property is going under contract very, very fast, and you're potentially going to be missing out there on those opportunities. So days on market, things are selling very fast, and it's been low for quite some time. So demand has been strong in the marketplace for the last 3 years, and if we've looked at that supply pipeline, it might be continuing to be low over the next few years, because there's not a whole bunch of new supply coming into the marketplace to cater for that demand, and we'll get to that towards the end. Absorption rate. So the absorption rate has not changed that much in the last 12 months, but it's still basically suggesting that the overall demand in the marketplace is strong, right? So it's a seller's market right now, and obviously sellers are capitalizing and getting in and selling property at a premium. So that's a big issue, obviously, if you're a buyer, because you obviously have to factor in that premium when you're buying, because it is a seller's market. But look, guys, absorption rate, ticking that box for me. Days on market, vendor discounting, it's ticked those boxes for me. So demand is very, very strong. Supply is very, very low. So we've got an imbalance there in the marketplace. And it has been like that for quite some time. And at the point in time of April 2024, it's very much looking like that right now as well. If we looked at the rental side of the market, basically we've established that Cairns has seen huge rental growth over the last 12 months, and that's largely because of the vacancy rate. So it's at a 4-year low now, around that 0.6%, well below 1%, very tight rental market, very low levels of supply there when it comes to properties available for rent, and that's obviously putting upward pressure on rent. So very good if you are looking to invest in the marketplace, not so good if you are looking to rent. So if I was an investor, I'd definitely be capitalizing on these low vacancy rates and juicy rental yields. So looking at the supply pipeline, we can see that the supply pipeline it's extremely low, but relative to previous years, it's okay. And what we might see is the supply pipeline actually maybe start to alleviate some short-term pressure around that new house and land packages, some medium density living. It might come in and maybe slow down that median house price a little bit, maybe, or it might slow down that median rent a little bit. But it's very hard to speak to that because we just don't know how much depth is in the marketplace just yet. So if Cairns has an additional 1,000 new properties come on the market for rent or to purchase, is that going to move the needle on the median house price or rents? I'm not too sure. It's just very hard to measure. But if we were to just sort of look at that supply pipeline relative to previous years, if it stays on the current trajectory, I think we're still at an imbalance between supply and demand, because that new supply pipeline is just not enough to move the needle right now in terms of the overall demand levels across Cairns. So yeah, guys, that's it from me. Median rent still rising, median house prices still rising, supply is low, demand is strong, supply pipeline looking very grim. So that's basically a summary of the Cairns marketplace.